What's up, everybody? It's your girl Erica from the Classy Climb blog. I want to come back to you guys today for a second show because a lot of times we talk about problems on YouTube, but we don't talk about solutions and we don't talk about how to make money from it. I know that crazy. This is a financial channel, and we're going to talk about one, how to make money from the situation that we're uncovering, and two, what does the next 90 to I'd say even 6 months outlook for our country look like via the stock market and via small business. So thank you for coming in. My co-host Diamond Dave coming in with the hot commentary. Please introduce yourself to the audience as we wait for some people to get in.
Okay, Erica, really glad to be here. Glad to connect again. So my name is Diamond Dave, also known as David W. Williams, a founder of the highest paid part-time job in the world options training course. And what we're going to try to do today is kind of give you an understanding of, how you can utilize the market to put yourself in a position to be profitable. We can't guarantee anything. We can't make guarantees of your success. We want to try to help you see the world and actually see what's going on in a different way and try to figure out when you're looking at a situation, how can you ask yourself, how can I make money off of this? How can I put myself in a position to be profitable? So you can start taking advantage of it as opposed to maybe just being alarmed or outraged by what's going on.
All right. So biggest thing I'm coming across people is, okay, Erica, you're complaining about Joe Biden, the mandates, this is going on with business. What do you see? Now, prime example why I love bringing you on, because I had a friend talk about travel stocks because, everybody was out of the airplanes. Everybody left the movie theaters. Everybody was like, oh, no. And he doubled down and invested in AMC, GameStop, of course, and in all the airlines, Delta, you name it, he invested in it. And now he's just laughing, riding the wave back up.
Yeah.
What are some things you see coming through as far as travel?
Well, we got to try to figure out is from a travel standpoint. So we look at that like airlines, cruise lines, and also not necessarily those, also the ticket vendors. So like Expedia, things of that nature. How are they going to continue to transition into this new environment that we're going to be operating in? And then what particular regulations are they going to create to kind of safeguard their business to make sure that their customer feels safe? And at the same time, is going to allow them to continue to conduct the same amount of business that they were doing before. Because what we don't need, and what I don't think is going to be good for anybody's business in the travel sector, is to create another barrier. So already when you get on the plane, if you don't have that exemption, you got to deal with that long TSA line. What we don't need is a pandemic line. So I think that we got to start looking at ourselves and trying to figure out what are they going to create to actually make sure that we can kind of streamline this process, but also make the customer feel like they're going to be safe. And I think the businesses that can best communicate that are going to be the ones that are going to have the most amount of success. We look at the cruise lines. They had a really kind of strong push as people thought that we were coming out of it, we were going back into recovery. Then they started selling off again. One of the biggest issues is down here in the state of Florida. They're going back and forth with the governor. I think the governor is doing a little bit of, So I don't know how they're going to work that out, because my issue is that we can't, from a state of Florida standpoint, make regulations so bad against these particular businesses that they can't do business here. But at the same time, the governor doesn't want to make it feel like that they're making demands out of customers or making demands out of people that are not legal. So we got to kind of figure out how we're going to balance that out. So those are some of the things that we got to look at. But I do believe whether it's the airlines, what's going to be the cruise lines, eventually they're going to figure this out. They're not going to shut down. So if you can get in, while the stock is still relatively low, you can ride it back up because they're going to figure it out. With the cruise lines, you do have to worry about lack of liquidity, their credit issues, things of that nature. I don't think Delta's going anywhere because they're Delta. There may be some of the major airlines. So I'm very confident in them. With the cruise lines, we got to worry about liquidity issues, how much they're burning cash every 90 days without operating at full capacity. But I think eventually they're going to figure it out. And even if we get one or two cruise lines to go under, they'll probably get bought out by another cruise line and turn into a super cruise line. And then we'll still have the one, because that business is such a good business from a revenue standpoint. There's no way in the world you're going to get rid of it.
It's safety. I mean, I'll just tell people like this. Our family's been cruising since I was 12. And I've been to all the Caribbeans, all the islands, and then some. And I'll tell you this, we saw the same families every year. They had 6 kids. They had grandma, grandpa, everybody's together. It's like a giant hotel floating with food. Definitely. They get off the boat for a little while. They get back on the boat to safety. It's Americanized travel, but they also do it in parts of Europe. And people go over to Europe, get on the boat, go see a couple of days, get back on the boat, and go on about their day. So if you guys are here, drop your city and state in the channel, on the chat. Part of why I think Joe Biden did what he did the other day is Yellen said, in October, we're going towards the fall. What better way to shore up our country than to throw some cash at business owners? The reason I say that is business owners are the people who ultimately usually are the landlords. They maybe own a food restaurant. I know one man, he started investing in more food restaurants during the pandemic than because his rental properties were kind of slow. Some of them weren't paying. And so what better way to make the money move around the economy than give it to business owners? I know people hate trickle down politics, but it really does matter in these situations. So when it comes to travel, would you say, just buy or sell airlines? No.
It kind of depends on what I would want to try to figure out. I would definitely swing trade it. I wouldn't. Let me explain this. If you believe the airline was weak before the pandemic, I'll be very hesitant about getting into it.
Okay.
But I do believe that they're going to rebound because just the way this country is set up, people like to travel by plane. When I was living in other parts of the country, if I had to come back to Florida, I always took a plane. I never drove because it just takes so long to get back and forth. I could do that same flight in one day. So, people in America, we're just really, we are used to traveling, and we're used to traveling the way we want to travel. And we're used to our travel being very convenient for us. So that's the thing, is that I don't think they're going anywhere, but we just got to try to figure out how we're going to deal with the regulations of this new reality, because I compared this to 9/11. 9/11 happened. Whether or not people believe the narrative as what was given, there were changes that took place after 9/11 that impacted travel that you just had to figure out how to deal with. So now I know when I was living in Atlanta, I would get to Hartsfield 3 hours ahead of time because I knew I had to get into the TSA line, and that could take sometimes 2 hours. And then Hartsfield being such a busy airport, you may have a hard time finding somewhere to park. So you got all these issues. And I know that I got to get through that TSA line because I don't have the exemption where I could just walk through. So we got to try to figure out from a travel standpoint, what regulations are they going to create that are going to be kind of like standard in a way of that they now have to do business that are going to impact it, so we can just get everything going back. Because the most important thing is we get the ball back rolling and we start engaging in more commerce.
For sure. Like, I think a lot of people think, oh, we're just going to be Zoom from here on out. We're not going to do business travel. The last couple of plane rides I went on, there were businessmen going to see someone in person because the account struggled without in-person conversation. Because if you're a business owner looking to save cost, you're going to start cutting costs everywhere. So now they send in these business salesmen back out to assure you of their product, to assure you of working with them, keeping the account open. I think what the pandemic, produced, unfortunately for Spirit Airlines, was to show that it really was just a Greyhound in the sky, but it was never really meant to be full all the time, right? I stick with Delta because it is the best. I'm not even joking. I did 30 flights during the pandemic. I did 50 the year before that. And I can tell you without a doubt, like Delta, regardless of how they've been tripping with their employees, they are the best.
Yeah, I've been flying Delta, and that's very important because there was an interview right when the pandemic started. A guy owns a particular company that's like an online, I would say, meeting company, and he said because of the pandemic, their numbers blew up. But he said the downside of it is that he can't put his salespeople on the road, and he wants his salespeople out on the road bringing in those enterprise accounts, and that's difficult to do through like a live stream because you got to get that face to face. You might have to do some networking, things of that nature. So he says the downside of this is that even though we're getting a lot of people to come on, I can't have my salespeople servicing my enterprise accounts. So that's where the big money's at.
Okay. And so with travel, healthcare, the other day when I was flying, there was a full-on doctor with a mask on, with the scrubs on, like he just left the hospital, flying on our plane. I'm like, wait a minute. Well, hold on now. Where you going, sir? Did you take a shower? Those clean scrubs? What are some things you're seeing with healthcare stocks right now?
So when I'm looking at healthcare, most definitely, I'm really looking at really not necessarily, I would say the hospitals or the healthcare facilities. I'm really looking at the people that are manufacturing the actual remedies to the pandemic. Because what I'm starting to figure like is that they're now speaking as if this thing is going to be seasonal, is going to be something that's going to require a person having to get boosters. So then what you're going to have is a full product line that can be sold to customers that essentially what they're making is that if they make all federal employees and they also make all federal people that have contracts to the federal government and they also make the military, then they eventually are going to turn around and make all corrections and they're going to make the whole police departments. You got this massive pool of people that every few months or every few weeks have to get a booster.
Yeah.
That's going to create a really robust product line for these people that manufacture these particular solutions. So when you're looking at a company like Moderna before the pandemic, their stock price was probably around $20. Now it's way, way, way above that. It's because one, they just have one solution. They don't really have any other products in the market. They have some other products in the pipeline, but they got one product in the market, and that's their particular solution to the pandemic.
And they got the government contract.
And they got a government contract, and they got money from the government to build out that particular product that they're not going to go sell. So it was a great business opportunity for them. So they now have, it's an incentive to keep everything going. So that's what we got to understand is that this is, I think, now going to be the new kind of go-to product. And if we notice, they're not talking about flu vaccines anymore. And that used to be the thing they were telling. They just, that's for some reason, that's got wiped off the table.
It's imaginary.
So this is the new thing that they're trying to push. And now they're saying that we're going to have all these categories of people that have to now get this. And also you got to get a booster. So I will look at the particular companies that manufacture these, and also maybe look at if there's an ETF that combines all these companies in one ETF. But anybody that has to deal with solutions to this particular issue, whether it's going to be manufactured of that, like the brother said, whether it's going to be testing, any kind of rapid testing, I will look at those because they're making it seem as if this is going to be something that we're going to have to deal with from here on out.
Yeah.
Yes, ma'am.
Part of why I was interested in a cleaning company is because all these buildings had these big contracts because they needed the water to keep being flushed, tables still wiped down, sanitizing, and now they need it more so because they're having employees come back. Now, if you don't think you're the boss with these new mandates gonna make you come up in that office, you smoking something.
Yeah.
So they're just gonna clean more often. I know, right? It disappeared. It went up and went down. Another thing about healthcare too is the people who get the government contracts. There was a man I was sitting across at a Cardone Ventures event. He had a contract for gloves, and there wasn't latex gloves there, whatever the other type of glove is. And he literally had to produce like 55,000 of them or something, some crazy number, and it was just for one facility. And I was like, what? And what's crazy about it is he owned a liquor company. And they said, well, how do you own a liquor company in this place? He says, well, some of the same manufacturing parts and pieces, when I went to go buy them, I could use them to make gloves. Yeah. so he had this whole other part of this warehouse. He converted where it's separate and it's clean and it's sterile to make gloves. And he's like, well, I'm just going to try to get more government contracts. So I just thought, people in healthcare stocks, if it's gloves, if it's products, if it's supplies, anything y'all can think of, make a list on a sheet of paper. If you go look in your doctor's office, and I know this sounds crazy, but they're not condoms, but they look like condoms and they go cover over equipment. And it's literally like a plastic sheath or whatever it's called. And, there's contracts for that. Like just everything you can think of in a doctor's office. They literally, somebody has a contract to make it. Someone has a contract to work on it. Yes, there's the word I'm looking for. Thank you so much. Yeah. And so, it is. What about Square with people going back to work? Do you mean Zoom or are you talking about Square, the swipe, like the payment?
Yeah. So I'll ask you, do you mean Zoom or do you mean Square?
Square.
Yeah. And with what you were talking about with the people that make those particular supplies, they may not be the biggest name companies, but they may have a great growth projection because they're going to be very much in demand. But I would do what Erica suggested. I would take a piece of paper and try to figure out what are going to be some of the essential situations in this new environment that we're going into, and what companies do I think are going to be able to take advantage of that. And it may not be the high profile companies. It may be companies that have a very, very small market cap, but they're very profitable based on how they run their company. And they can put it in a situation where they can have a great opportunity for growth based on the fact that there's going to be a lot of need. Because if you make masks, there's going to be a big need for mask companies, gloves, things of that nature. And then we're going to figure out, is this just going to be standard? So in other parts of the world, a lot of things that we're using now are standard to them, but to us, they weren't standard. They now may just become standard. I worked in healthcare for a year. We never use masks unless you worked on certain units. They may make it now in healthcare. Everybody has to wear masks just as part of their daily 9-to-5 job.
Yeah. And they're already showing that children are kind of struggling with facial recognition of emotion because they're wearing masks all day. My nephew was like, I don't have a table partner. And the teacher was like, well, that's okay. She's like, does nobody want to sit beside me? And the little girl turned around and said, I'll sit beside you. So the kids are already experiencing this anxiety of like, they can't read people's faces. And I know that sounds silly, but like children need that from ages 0 to 7 is when you kind of get programmed for emotion, how things should be, how to set the tone of school, all that stuff.
Yeah.
He said Square the payment. Okay. He said a lot of people got on Square with side businesses picking up. Ah, okay.
Yeah.
I think it still will be available depending on what their side business is. Yeah. Gig sir. Okay, so XRP, I don't know what that is.
Okay, that's a cryptocurrency.
Okay, okay, okay.
Yeah,
All
yeah.
right. Okay, so
Yeah, I saw that. That UPS and Roadie app. Yeah, I saw that like I think the other day.
mhm.
Yeah, they got to figure something out because Amazon's trying to get them out of
Stop
here.
it.
They
Yeah.
got to fix
I
something
mean
out. They got to fix something out.
y'all, wow. Okay, so solar, you talked about solar on your channel, and I just thought it was a good conversation to segue to because especially I'm in Austin, Texas, and like
Okay.
that's the racket, right? My friends in Houston, I got two young men I know that are 26-year-old, made $1 million in solar. They ain't even running their company right, and they still made $1 million. So imagine the guys who actually have systems in place and processes, because I think once we had that storm come through, the people who had solar and a battery, right, were still rocking. People who had generators connected to the house still rocking. They've already predicted for Texas, and I know this sounds terrible, doom and gloom for y'all, but we had such a mild summer. I know y'all think it's so hot out here. I've had friends visit and be like, it's 95 degrees. I said, y'all, I've never had a summer where there's only been $200 days, 100-degree days. We've only had two. The rest of the summer's been like 90. I'm walking around in full pants. And I had long sleeves on one day and it was 90 degrees. Somebody thought I was crazy. Y'all, winter's going to be very cold in Texas. I'm going to just tell you now. We lost 90% of the palm trees from the storm earlier. So
Okay.
I want to do a whole nother video. We'll do another video on it, but I'm going to tell you what you need this fall. Like supplies and any stock related to those supplies.
Okay.
Solar, talk to us about it.
Yeah, so solar's getting really big because I did a little video where we're talking about solar bonds. But the market for solar is getting so big now, especially in certain parts of the country where you have a really good environment for it. And it's still pretty much an emerging market. One of the reasons why the market is so big is because I think people get tax credits for solar. It's kind of seen as the kind of like a way to, I found out that you can not only be on the grid, but you're also going to be off the grid. So I found out that now you can also get your solar and sell those particular credits back to generate revenue. So there's a lot of ways to make this particular situation profitable and attractive to this person. They also can get that solar finance, and then what it does is create a bond market. I think this is a good opportunity because it's an emerging market. And like you were saying before, is that you have people now that are operating in this market and making a lot of money, and you don't have really what I would call like major players in the market yet. So what I would look for is solar companies that are still burgeoning, still in their way up, because what we're looking at is that Biden most likely is going to create some type of legislation to benefit that particular sector, because he's trying to push, I think, for a certain amount of solar, a certain amount of alternative energy by 2050. So they're going to start putting money in that particular direction. So figure out what companies you think are best positioned for that, how they can take advantage of it. And then, don't, I would say, overcompensate yourself or take too much or go too deeply into it. But look at the situation where you can kind of put your money and kind of walk away from it and look at it in the next 5 to 10 years, as opposed to watching on the day-to-day level, because I think it's going to be a slow play, but I think it could get big because solar is also really big in Florida. I know a guy down in Homestead. He was making a lot of money selling solar installation, and he was essentially just doing it through like walk-ups to people's houses. So I think it's very much something that once people get on board with it, it can blow up, especially amongst people that are kind of like maybe like a higher net worth bracket. Yes, ma'am.
I'm going to tell you right now, if you go Frisco, Prosper, Texas, by where they're putting that new women's LG, what do you call them, with the golf, women's golf?
Yeah,
In Frisco, yep, in Dallas, you see nothing but solar panels on very expensive houses on one side, never on the full thing, just on this one side. Y'all, I'm telling you, that's what he does. He knocks on doors. He takes a bunch of young Hispanic kids, they knock on doors, and they just knocking out contracts, just knocking them out. So, I don't know if you remember when Obama was in, but they were on the radio. Like when they had the Obama phone on the radio, for some people, they were talking about solar on the radio. And I find that I keep saying I hate to say it's classism, but it is class. There's some people who are participating in our economy, and some people are products of our economy, right? Consumers of our economy. What's the best solar to buy? I'm not gonna say I'm not naming any companies. I'm just saying we're reviewing some of the stocks you can invest in for this right now.
Yeah, I would look at a group. So one, I would try to figure out whether or not it's going to be an ETF, maybe just a basket of solar companies. And then I would look at individualized solar companies and kind of understand which ones you think have the best growth projection based on how they run their business. But we understand that there's going to be a lot of legislation that's going to be created, especially to favor American-based solar companies. And don't just look at the people that do the installs. Look at the people that maybe sell the parts and supplies. Look at people that maybe do service. Because what you're going to get is a full, robust economy around a particular solar sector. And it's going to be more than just the installation, because once you put it up there, then somebody has to fix it or somebody has to repair it. And the most likely the people that own it or leasing it, they're not going to want to get involved in that.
And a lot of people are just, the service connection, right? They come and sign you up. And just to give you guys some ideas, some names, some companies.
And see, I know about Enphase.
Post Solar, Enphase, Sun Power, Solar Edge. This is an ETF, and we can open this up here. Again, Canadian Solar, Tesla. And I'm telling y'all, I'm in Austin, and I'm telling you, like, people are like, oh, Tesla gets on my nerves. I'm like, you're going to see Tesla charging stations at homes. You're going to see Tesla solar panels on homes. Tesla came to Texas for the right reason. I think y'all think, oh, y'all going to be ruined into the ground. No, Tesla's going to make $1 billion off Texas. And I know people are like, oh, why you live in Texas? I really have a big bet on Texas land, Texas solar, and electronics. This is just some of these companies that you may have never heard of these companies. Look at all these different companies.
Yeah, I heard of Plug
Power line. Okay, Azure Power. Here is the ETF we were just talking about. Let me go right here. Boom. It's $83 right now.
Okay.
I hate this. This isn't like I'd rather have Yahoo Finance. Yeah. What is this? I don't like it. Hold on, y'all. Let me go put 10 in Yahoo Finance. Yahoo Finance. 10. Put it in there. Give it to me. There we go. All right, $83. $3. Let's go for the past month. What it look like on the chart? Woo! Looking like a sea of red out there. Let's go for the past month. Still red. Let's go for 6 months. 6 months red. A year red.
What is this? What is this holding?
Wait. Boom.
It's green on the 1 year. Yeah. So we got to look at what their holdings are. And then we also got to ask ourselves, even though they may be down now, do we think that I can maybe go up in the future based on this holding?
This is the 5 year.
See what I'm saying? How it rolled up. So it's down from its high. But at the same time, you want to really investigate what companies are composing that ETF. How is it weighted? And what do you think is projected? Because a lot of times the ETF can be better than you going into an individual company because it's more balanced. Where if you put everything behind one company, that company doesn't do well, then you don't have any exposure to anything else. Its
top holding is Enphase at 11%. Solar Edge is 10% of its assets. Sunrun is 7%. This has got to be Chinese. Zing Solar Holdings, I think this is Chinese. 6%. First Solar, Shoal Industries, ordinary shares, Class A. Poly Energy, Hawan, this got to be Chinese as well. 2.6, and Sunnova Energy.
I'm a big. This is not investment advice. I'm a big fan of Enphase. So I am an individual big fan of Enphase. So, but we just got to see where they take things. But I think this market is going to just continue to get big over time, and I really think it's going to be bigger than the EV market. I'm
gonna click on here. Enphase. Woo! Enphase Energy is more expensive than that ETF. Let's go for the 1 month. Let's go for the 6 months. Was green for 6 months. And then it's got for a year here. Red for the year. That's year to date red, but this is for the year. Green. 5 years been real green. Whoa, look at that. 76 cents and $158. If you got in this in 2016, you having a good old time. You were having a good old time. Okay. So just some examples here. First Solar, Excel Energy is a utility company. Hannon Armstrong, again, definitely read up on this. Don't just take my word for it. I just know it doesn't take a lot for you to sit down and research some stuff, because trust me, they're going to be, JP Morgan recommended Sunrun. Interesting, but Enphase, there you go. It's recommended for watch on September. SunPower, First Solar, Enphase. So that's that. What was our next one? I don't want to get too sidetracked. It was electric. Our other one was electric. So what are your thoughts on some electric stocks to watch out for? And
Okay, well,
electric can
everybody,
cover EV, all of it,
yeah,
cover
yeah.
your whole
Everybody knows about the favorite, which is going to be Tesla.
thing.
Also, Neo, Xpeng, some of the Chinese-based companies, but you got to kind of watch your exposure to some of the Chinese companies. One of the biggest things is that the Chinese companies, I think, reported maybe today or yesterday that because of the chip issue, the deliveries were down.
Mm-hmm.
So that's something that can impact those companies. My
Mm-hmm.
biggest challenge with all the EV companies or all the EV car companies that are what I would call the upstarts. I'm not talking about like Toyota and Honda and Ford and Chevy and GM moving into the EV space.
Mm-hmm.
Is that we already have people that are already buyers of those particular brands. They're very much brand loyal. What is going to make them switch to those newer or those different models as opposed to going to what they're going with? So let's say I drive Toyota. If I get an EV, most likely it's going to be a Toyota. I doubt I go buy a Tesla EV because I've never driven a Tesla before.
Mm-hmm.
So
It's
I know
nice.
I feel so I know what kind of car that Toyota puts out from a reliability standpoint.
Mm-hmm.
The way if I'm gonna go EV, so I'm a fan of the EV being a segment of the market, but I want to see how the individual manufacturers compete because I think with Tesla, they're already talking about them not necessarily being a car manufacturer and them trying to go more into the overall energy game. And with the
Mm-hmm.
EV cars being a segment of their overall big business portfolio, just being like a division of their energy division, because they kind of understand that it's going to be hard to kind of make people transfer over. With Neo, it's going to be different because they're going to have the Chinese market. But in this US market, I think even if we do get some penetration from an EV standpoint, and we're going to have a lot of legislation to push in that direction, the first thing I want to see is infrastructure built.
Mm-hmm.
I think the cars are kind of putting the cart before the horse. I want to see
Mm-hmm.
charging stations put everywhere. Once we have charging stations, then I'm confident that people that buy the cars can use the car.
Mm-hmm.
Because what I'm looking at now is that even if you have an EV car, it's going to be difficult to do any kind of long distance travel because of a
Mm-hmm.
lack of charging stations. So with this particular bill or the initiative by Biden, if we can start building charging stations all across the country, I think that can really accelerate people investing a lot more in the actual automobiles or what some people call the vehicles.
What's interesting is it reroutes your travel.
Okay.
So my biggest thing is I was talking to our friend and I was like, "Hey, I'm gonna drive from Dallas to Houston. I'm gonna be there in no time flat." And he has a Tesla. And he was like, "Well, I'm not. I'm gonna have to stop." And I said, "What? That short distance?" He said, "Yeah, I'm gonna have to stop." I'm like, "Oh, that right there kind of soured me on it because my whole point was driving Austin to Houston, Austin
Yeah.
to Dallas. No cash. I mean, I already drive a vehicle that really doesn't take any cash, but my other vehicle is a Forerunner and it takes some gas.
Yeah.
So they got to work on somewhere on that. They have long range, but even then they had to sell it better. But the actual car reroutes your driving so you can go to a charging station. It finds one for you on
Okay.
your route.
Okay.
So I think that's something people really got to look into because I've started noticing the commercials. Now, this one guy said there's a company that's been raising money for deposits for a car and they ain't developed it yet. But I got to go find the name of that again because somebody brought that to me. I was like, that's crazy.
Yeah. And that's something I want to talk to the audience. So like this EV space is going to be really, really hot.
Mm-hmm.
You're going to see a lot of Nicolas.
Mm-hmm.
That's just how it's going to work because it's going to be so easy to attach EV and technology to what you're doing and to raise capital. But in reality, you really don't have a real business because
Mm-hmm.
once the space becomes even hotter, more people are going to want to try to figure out how can I invest in the next Tesla.
Mm-hmm.
So because so many people are going to want to try to pull that off, it's going to create an opportunity for people that are not necessarily 100% genuine in what they're trying to do. So I want to tell people to be wary of that. It took Tesla a very long time to get to where they're at currently right now today. So it can be a journey for any company that enters into this space. So whatever you're looking at from the EV vehicle, because everybody's going to have a different category. So you're going to have the cars, you're going to have the trucks, you're going to have the the postal carriers, you're going to have the semis. Everybody's going to have a particular area and angle at which they're going to try to go at it. But the question is, do they have the actual ability to actually be successful in that area based on their past track record, or maybe based on the team? Because you're going to get a lot of people that are going to come into the EV space. They're going to present themselves as having a solution, but they're really not going to have a real business.
Mm-hmm. They were faking the funk on us.
Yeah, definitely. Just like I said, Nicole, like I knew that wasn't legit from when they came out with it, but it just took time for it to unravel.
So, because some of y'all be talking smack in the comments. Okay. Tesla, Xpeng, L Auto. Half these people I ain't heard of. Workhorse Group, I have heard of them. Lucid Motors, I have heard of them.
Yeah.
And that's mostly because of following what's her name from ARC? Charge Point. I ain't heard some of these other ones. What is that? Yeah.
See, but see, if you go back to the left, we're going back what I was talking about. So Workhorse was supposed to get a United States Postal Service contract. That fell through. I think it's probably going to go to one of the traditional manufacturers. So without that, they don't really have there's no really need for their company now. Lordstown Motors, I think, is under SEC investigation. We know what happens in the Polo. You see what I'm saying? So this is what I'm trying to get people. You got to do your research, because it's easy to just start a company and say, well, you know what, we're going to do this in the EV space. But it's really not based on the fact that we actually have a product to take to market. A lot of these people are just companies to where somebody else is going to do the manufacturing. Somebody else is going to do this. Somebody else is going to, and we're just kind of like white labeling everything. Well, if you look at Tesla can actually manufacture a product. I got to give them that credit. They have factories that actually make products. Manufacturing is very difficult to learn how to do. You got to create your own SOPs. You got to go through the trials and tribulations of manufacturing. A lot of these companies don't want to do that. They want to give it to somebody else, let them do it, and they white label it. Nothing wrong with that. But the problem is that you really don't have anything unique that you're bringing to the market, because you don't even control your own manufacturing.
And they have 118 employees since 2007 in 2 locations. Some of their subsidiaries, AMP Electric Vehicles, Unmanned Aerial Systems. They might make some money there. And Surefly.
Yeah.
I want to look at that real quick. Y'all, sorry, I be like, I see somebody be like, where does that? What do they own? Because people always talk about Pepsi and Sears and stuff. And I'm telling you, these companies own other companies that own other companies. They're going to get contracts on contracts. So anyway, we go back up. So what was the other one you said up here had a problem? Nikola, of course, they got in trouble. What's the other one?
Loistown Motors.
Loistown Motors. Okay. We clicked on them. They are out of Ohio. They in the same area. All these people are in the Lordstown, Ohio, where these old places used to be. The General Motors invested $75 million into them. That's ridiculous. They have $767 million in assets and $630 million in equity. What did they do wrong? Talk to us real quick. What did they do wrong?
I mean, it was a scenario where their narrative was that they were going to bring manufacturing back to the Ohio area. And it just kind of didn't go the way everybody thought it was going to go. Where, like I said before, is that everybody now is going to claim that they have a solution to this particular problem because they want to get a piece of this money. It's a big market in the EV space.
Get a contract.
You need a contract. So I would tell people to really look at the team.
That's ugly.
Do they have any experience in manufacturing? Or if they don't, who are they partnering with to manufacture? And what are they actually talking about from a business model standpoint? That means that they're going to be able to compete in this particular area, because if they put out a truck, Tesla puts out a truck, GM puts out a truck, we know Toyota and Honda eventually will put out a truck. Well, then how do they compete?
Tesla put out a truck for rappers and football players.
I feel you.
On a napkin, and they literally drew what he put on a napkin. This might be more of a actual functional truck. My biggest thing is, I know y'all say, oh, Erica, if you've ever run a Tesla, you like it because it's quiet, but it's too quiet. And me, I like to hear audiobooks or different things in the car. So that's why I liked it when I was driving. I was like, man, someone drive me and I can listen and I can talk on the phone. Take my money, right? But there is something to be said. My mom used to own a Camaro SS, like 1968 or whatever.
Okay.
There's something to be said for that loud rumble noise. I can identify something's wrong with the vehicle from listening to it.
Yeah.
Americanized car feel. So when you get in these quiet cars, I always love watching men's faces because they're always like, they're not as excited.
You can't feel it.
They can't feel it. That's the word I'm looking for.
Yeah.
So
and you write about being able to hear a car and tell what's wrong with it by the way it sounds. Yeah, and that's something that you get used to. But what they may do, because you said that that's good customer feedback, is maybe they can create an effect of an engine sound, even though there's actually no motor, no combustion engine inside there. Now, I don't know about the vibrations and things of that particular nature, because that's something else you also get with those type of cars. But I think once they get enough people used to that quiet feel, because one thing I did notice when I hear those EV cars, you don't hear anything. like you hear with a regular car. As they start to drive up on you, it doesn't make any sound.
Oh, okay. So this is what you were talking about. And I think you were spot on. Here it is. This came out a month ago. It just said, see if it's down here. Okay, nice website. But I'm gonna go back to where it said it. It basically said they're gonna run out of money. It warns as of June 9th, hey, we about to run out of money.
Yeah.
That's crazy.
And so this is the issue. I talked about this in another video. If you're not driving any revenue, you can't sell a bond. You don't have any assets, no collateral, you can't do senior debt. So the only way to raise more money is to sell more stock. So that's one of the issues that they run into, is that they really don't have anything yet. And so the goal is let's start the company, but we don't even have manufacturing capacity built. So then how do we get the capital to do that without doing massive raises of stock, which means that we dilute the people that originally came in, and we just keep doing these further and further dilution. So right now they're at $6.18.
$6, yeah.
Yeah, it's going to be hard to do a raise at $6.
Part of what I'm seeing in this marketplace, and I keep telling people, businesses is not hard. Y'all really make business owners seem like geniuses. It's literally sale or pre-sale. When people have an idea or a product, oh man, I want to do these t-shirts. You don't go buy a bunch of merch. You pre-sale the photos of the one t-shirt you got and sell all the merch. So with these vehicles, they bring out 1-2 nice little trucks, or they done made 10 of them, and they need a contract. So to me, if you have any of these companies, y'all need to have a team of salesmen, just honest, running out there pre-selling these items.
Yeah.
Or a guy who's in the government, which I know they do. I mean, a lot of this money they're spending is on lobbyists to go get a contract. Like, hey man, get me in this contract. We need at least one contract, because if the government's saying they're going to replace all United States postal trucks, every type of, school buses, everything, to have electric vehicles, that's millions of trucks, that's millions of cars, that's millions of vehicles.
But I think it would work better if they were privately owned companies. I think once they go public, it creates a different dilemma, because now you got to report to shareholders. If we were just a private company, we could hire a sales team and we can go out and find people that want to buy this particular car. Like you said, pre-sell it and then justify. We can not take that and go justify manufacturing. And we can be like a boutique label. We just sell 10,000 trucks a year until we get to a certain point, and then we amp it up. And then once we get that track record, we can now go to private investors, get some more money, and build the company out now. But see, they go public because why? They want to exit. Money. They want to exit. They want to exit.
We have that whole model built. And see, here's something. When I was at the Cardone Ventures thing, there was a guy who made a telehealth company. Okay. And he was building it to keep it. The people who originally invested in the first round wanted to just, hey, we built it so we can sell it.
Exactly.
So he had to go make enough money from the first round of sales to buy all of them out, and then try to run around and really, really like get all the salesmen left in the company to market this telehealth. And it just sounded crazy when I heard it. I was like, it depends on who's on your board and who created the company. Who are the first original investors in this thing? They're going to want to sell. So this stock was $30 plus in March.
Exactly. And see, because the thing is this, Erica, it's so easy to take a company public now. It's like almost anybody can do it. And because everybody wants to own the next Tesla. You can roll it out there, say we're doing EV, say EV 30 times. And then, you got a business now. And if you can convince enough people to buy into it, you can do it, as opposed to taking it the long way, which is be a privately owned company, generate some revenue. Because my question with these companies they're companies that sell an actual product. I'm not a fan of a product company going public with no revenue or little to no revenue. So you've never really driven any real sales yet. You got to get a lot of other pieces in order, because like a lot of their manufacturing, a lot of their deals are coming through other people. We got to do all of that before we actually have a company. So I would rather see you do all of that, build those relationships, get that synergy created, figure out a way to get a bank to give you some money for manufacturing. And once you start rolling trucks off the line, okay, now let's go public. But I'm not a fan of these companies going public. And like Nicola, they've never sold any items yet. They don't have any made an item yet. So it's not even like, I forgot that website where we make a prototype, we put on the website and we see, can we get financing?
Yep.
They haven't even done that.
Indiegogo.
They're giving you like a Photoshop or a car with a truck with a wrap on it of the company.
Sorry.
And we're assuming that that's an EV truck, and they were using that to generate enough publicity to justify the fact that we're a publicly owned company. And Michelle Green, how do they have pre-sales if they don't have the money? Because the job is to pre-sell and then get the cash. So they might have had commitments, but no real money yet.
Okay, I apologize. I don't want to cough in y'all ear.
Are you all right?
It said Lordstown was over when that truck caught fire. The truck caught fire?
Yeah, I didn't know about that.
Yeah, that's a wrap. That if you have a demo and the demo catch fire, it's a wrap. Excuse me, y'all. Oh, that's right. They do.
Okay.
I forgot. It's like a little thumb drive. It's like an update.
That's it. I would do the same thing too, because I know people want to hear that sound. And I would have different sounds for them to hear.
Ford is going to add exhaust sound for. Yeah. They got to. You have trained a person to listen to the vehicle for issues, noises, something's wrong. If it's too quiet, I feel like, we talk about, I think you said it in one of your videos, I can't remember which one, but you're talking about people up there texting on the highway doing 80 miles an hour. Exactly. And it's like people have been trained to hear noises, or if they drive over something in the road, stuff like that. So, yeah. Apple's making its own car. Apple ought to just stop it.
Yeah,
of course, we got to see. Steve Jobs should have wrote some stuff down because they done ran out of things.
Yeah, we got to see who they're going to use to manufacture the car. Because I think they're just going to add, I don't know, probably maybe like some hardware into it. We got to see who they're going to use. I think they were going to use a Korean company at one time. But let's see if they go in that direction. Because what people got to understand, the car business is really not like the best business to be in.
Yeah.
I don't know why everybody wants to be in it. It's really not like the best business to be, unless you do something boutique, like, Bugatti or something like that. But if you're trying to do like volume cars, it's not a great business to be in, because you got to build massive amounts of manufacturing, and then it becomes an HR issue. You got to have all those people. Now they're going into robotics, but you still got to build out the manufacturing capacity. And that takes a lot of work. That's what Musk has been really good at, is raising a lot of money to build manufacturing. Fisker made $27K. Okay, so Erica, you are doing better than them, and they're publicly owned company.
I could do that in a damn month.
Exactly. So you need to go public and start playing with these people.
Fisker last net profit. Oh my gosh. Let me tell you, there's so many things. We'll talk off air. Companies. I don't know how the company's worth $4 billion and negative 171,000%. Yeah. That don't make no sense to me. It really don't. I think that car thing is what gets people's attention. Okay. That's what I really think it is. And I think the car thing gets them in the market. Like, you're talking about Tesla, and no matter how much people said bad things about Tesla, you're talking about them. Whether the cars are ugly, I don't care about them cars, but you're talking about them. Oh, hashtag Teslas get on my nerves. Austin's full of Teslas. There's like hashtags about them. You're talking about them. I mean, it really is the easiest marketing in the world, is having the car, because people love talking about cars. Like I'm not trying to be funny, but if you just sit down in a bar, you will hear people talk about cars, sports, and women at least 72 times.
Yeah, I feel you.
Oh, I know. It's so ridiculous, Sherlock Holmes. The part of it is what people don't realize is EV space is only 1% of the market. Yeah. Out of all the cars out there, it's like 1%. So we're talking about this thing like it's about to just change America. And I'm like, there will always be some little Korean lady who goes out and buys a 1999 Toyota Camry before she'll buy this car. She will buy that old Honda. Okay, so our other part was stocks to watch out for. Somebody said it in the comments about holistic. So the last three, as we wrap up the show, is fintech, Amazon, and holistic.
So fintech, I think somebody spoke to that before, was going to be Square or PayPal, or look for any company that does any type of online transactions. Stripe is also supposed to be doing an IPO later this year. Any company that does any type of online. Stripe.
You know what? You're probably right, because they kept sending out surveys about.
Yeah, they're supposed to IPO. They said they were going to IPO. We'll see, but I think they will, because it's a great time for them to do it. Look for any company similar to those, or any companies that I may not have that I've spoke of that are similar to those that have that particular ability, and also are operating in that business space and also can provide financing. Because I really think that's going to be a big space. It's something that you talked about before, where a lot of business owners can't get traditional financing, but these fintech companies will finance them because all they do is say, just send me your cash flows and we'll finance you.
They really do. Again, here's
Yeah,
the fintech.
but I think Square is going to be a heavy hitter in the next 5 to 10 years. I think PayPal also will be there also, and I think the traditional transaction services like the Visa and the MasterCards are going to kind of have to figure out how they're going to catch up. I'm not a fan.
They got that under poor market.
Yeah. That's what a lot of people be doing fraud on that too. But I'm not a fan of Coinbase because I think once they have to start charging commissions, I think their business model is going to fall apart.
I'm surprised Lemonade is up there because I think of them as insurance
company. Yeah, and I don't really. To me, they're an insurance vendor. I don't even see them as really an insurance company. They're just an online insurance vendor, but they position themselves as a tech company.
Lending Club, yeah, I was with them for a long time.
But I'm a big fan of Square. PayPal also. PayPal is getting ready to go into trading. So I think there's a lot of opportunity, but I'm a big fan of especially Square. I think Square has a lot of growth opportunity. And I think I wouldn't be surprised if one of the MasterCards or the Visas try to eventually buy them out.
Global X, it's at $51 right now.
Okay.
Its charts look crazy. If that's its charts, that's crazy right now. That's crazy. Let me go look on Yahoo.
That might have been the 2020 dump.
Can I spell? Can I not? I cannot spell. Oh, there we go. Okay, it's at $51 right now. Let's look at it for the past 6 months. 6 months. 6 months been green.
Yeah.
Past 5 years, nothing but a gradual incline from October 2016.
What are its holdings, if you don't mind me asking?
Going down here, let's go on to the right. Top holdings, Square.
Yeah.
8%, PayPal, 6%, Aiden, 6%, Afterpay, Intuit QuickBooks to make a lot of money. Bill.com, Stone, I don't know what this company is, Fidelity National Services. They seek to provide investment results that coordinate generally to the price. Yep. Peer-to-peer, mobile payments, peer-to-peer, marketplace lending. They're going to make the money.
Yeah, they're going to make the money. So the ETF may be a better play.
Oh, man. 247? Yeah. Lord, I didn't know Square was that.
Yeah, look at their like over the past year, they just exploded.
This is 1 year from last year to this year.
Yeah.
Year to date is this. 5 years this. Good gracious. Yeah, so they were at, on March 20th, the beginning of the pandemic, they were at $52. The 1 year estimate is $302.
Yeah, I believe it. You know, people are taking profit now, kind of at the top, but I think they just keep going up, especially the way they're positioned in the marketplace. Everybody's using them. I use them. Also use Stripe too, but Stripe isn't publicly owned yet. But I know this is not investment advice, but I'm gonna jump on Stripe when they go public.
Excuse me, I apologize, y'all. Bro. There are several, like, I know it's hard for me to do. I'm gonna probably put together, I'm trying to think of a way that I don't get in trouble, but I'm gonna put together a financial stock list of stuff that are just my long-term, like I'm putting money in it, disclaimer, because I have about 100, I think my list now is 150 different stocks that I know people are like, oh, I just want to be a trader. I'm like, you just want to own some shares of these things.
Yeah. You do.
Like, you just want to have some ownership. Like, the iHeartMedia thing is long-term play for me, right? Just going to keep buying it up. And so you can have more say in podcasts and who's on there after you did that video. But a lot of these stocks where they're cheap, $10, you can drop $100 every week for a year.
Yeah, definitely.
And it's not even, I mean, let's even say just drop $50 a week. I just think it's something I might put in a little PDF and put out there.
Yeah, I think Square in 5 years could be pushing almost 1,000. I just think it got that much growth potential, just based on the marketplace and the way the actual world is going.
Well, also too, when I went to the Hispanic food truck, and they always take cash. They just be like,
Okay.
come on, there's an ATM over there. Bring us cash. They had a little square.
Yeah.
They finally updated it, and it was because their granddaughter was over there. But the little Hispanic couple, they cash. Give me the cash. So when I start seeing all the Hispanic food trucks with the debit card swipe machine, I'm like, they done got big time now.
Yeah. That's that move.
Uh-huh. Y'all got some good stuff in here. I'm not ignoring it. I don't know if you know. Do you see that?
Now, Mr. McCoy, could you explain to me? I think I seen a headline for it, but I didn't necessarily read it.
Mm-hmm.
So if you could break that down, I appreciate it.
Somebody say,
I know Apple was down today though, but I ain't worried about that. They go back up.
BlackRock is still killing it. I mean, yeah, there's just so many companies we could name on here, y'all. But that's why I said I probably would put together like a little PDF of like long-term stuff that I see a future in or that I contribute to. ARK Financial, of course, I clicked them. Their ETF. Because they're $52. They're $52. And I know that sounds like, oh, Eric, you're just talking like that. But again, hold on, okay. They're $52. This was in ARK. Square, Shopify, Zillow. Zillow has a plan for you. I'm telling y'all, Zillow ain't playing. I'm just going, if you in real estate and you playing, Zillow ain't playing. I mean, Diamond Dave, you did a video on the Walmart people getting removed out of here.
Yeah.
Y'all not paying attention.
Yeah.
Coinbase is 5% of their thing. PayPal Holdings, Aiden, some of the companies we just talked about. Open Door, Twilio. Where her Tesla at? She ain't got no Tesla in here.
No, this is just her fintech one. She got different ETFs for different sections. Yeah.
Where the other one?
I think it's the ARK Innovation. Is her other one. I think that might. And then she got one for biotech or genome stuff. So, like she got multiple ETFs. She runs, she's spread out.
She ain't playing with y'all. This is her active ETFs. Okay, see this where you go. Thank you. Okay, everybody. See, I might have to get a whole video on just ARK breakdown. She ain't playing. Okay, let's go next generation. I'm gonna be nosy. Real quick.
Yeah, she big on the growth stuff.
What's in here? Tesla's in here. Yeah. Grayscale, Bitcoin, Twitter, Unity software, Teladoc. Okay, I can believe that. Coinbase, Shopify, Roku. I almost got a TV show on Roku, y'all. I almost was tempted. DraftKings, Spotify. It's cheaper than you think, but the key is marketing it because one of the Jesse Smollett, that guy, his brother and sister. They have like 8 brothers and sisters. They have a cooking show. And it's on several channels and in Roku. So, but all that stuff is all marketing at that point. So, okay. Well, I'm thinking, I tell people I think long term because here's what happens: infomercials and radio, those people make millions every year, and it's on autopilot.
Yeah.
You could literally put a book out there, aka Kevin Trudeau. Debt cures or whatever. The book that got him in jail, like the book that really got him in jail was the debt book. He told y'all to pay them companies $100 and they couldn't close on you because it was in their contracts. And see, people don't read. That's what that man went to jail for, telling y'all that truth. But you can put a little bit of money down. It's gaming. Okay, thank you, because I didn't know what that was. So, but yeah, there's a way to put shows and stuff on Amazon and Netflix and stuff. So trust me, like Kev on stage stepped out there and showed y'all some stuff, but I don't think people understood his long-term play because that just is long-term. So that's our on the fintechs. That'll be a whole nother show we'll do about. I just want to break down ARK, what she has in those. We'll do that another day. And so Amazon and holistic. What are your last 2 as we close out?
Okay, so I mean, when we start talking about Amazon, I'm just bullish on Amazon until it's over with. They're a 800-pound gorilla in their space. I know I focus a lot on logistics. They also got, the service side. They also got other things going on. But I just think they're going to be a centennial. I think you called it a centennial company. What I mean by that is a company that's going to be around 100 years. I would tell people that if you can even get in on fractional, this is not investment advice, but if I could get in on fractional shares of Amazon, I would. Because they're going to be worth way more in 5 years than they're worth today. Because what they were able to do because of the pandemic, is they were able to capture a lot of market share because small businesses were not able to operate, but they were. And they were positioned to operate in this new reality. They're not talking about going to physical stores where you can literally go into the actual store almost from a retail side. So what they've done is they're smart. They pushed the retail stores out of business and then now they're going to take their space.
Because people really aren't completely fully done with physical.
Exactly. See what I'm saying? So that's what they did. So they're smart. That's what they do is that they did this when they first started putting out the superstores. Is they eliminated their competitors from a superstore standpoint, and then they just replaced what they were offering because you still got a need for this stuff. So people still have a desire sometimes to go to a physical store for whatever reason. Some people like to look and touch what they're buying. So Amazon's now going to do that. And they also, another reason they can do that is because so many stores couldn't compete because of Amazon. You got a lot of excess commercial inventory all over the country. So it's going to be really easy for them to find locations. So I'm big on Amazon long term, right? I'm just big. I don't know how that guy figured out how to be that good at business. I don't know whether it was a revelation or just he got lucky, but he's figured out really not just how to. Yeah, but but the way in which they take up all the market. I put a video on my YouTube page about how they're investing a lot into being a shipper, not only for themselves, but for other people. They're coming after FedEx. They're coming after UPS also. So I just think that their ability just to take up so much market share is going to just make them get bigger and bigger. I think Amazon, when we're gone, it's still going to be here going.
Yeah.
And I can't say that for a lot of other businesses.
I remember when Amazon came out with the platform where you buy to watch TV and everybody's like, oh, I'm not buying that.
Yeah.
I watch I only watch. If my laptop isn't connected to my TV, I don't have cable. So it's Amazon, Prime Video, or it's Netflix, and that's it.
Yeah.
And Hulu now, some just because of shows, but so thank you for your on the Amazon there.
Yeah, so I'm bullish on Amazon till it's. I got Amazon going. I thought they would be at $4,000, $4,000 already by now. They're having some problem hitting that particular price point, but I think they get that price point. I think by 2025 they'll be over $5,000.
Yeah. Okay. Microsoft is our last two were holistic, and then you can answer this Microsoft one if you want.
So when they say holistic, can you expand kind of what you mean by that?
Let me see if I can go back and find what they had.
Okay. Microsoft flirting at 300. They think you do a stock split. So Mr. Holmes, I would ask you what do you think they would do a stock split for? So normally, from my opinion, when they do stock splits, it's to make the stock more affordable to the average person in the market. I don't think 300 really justifies that, but it could. So I don't know at 300. I thought Amazon would do a stock split before they got to 4,000. They don't look like they're trying to do one anytime soon. I was surprised at Tesla doing a stock split at their price point, but for whatever reason, they decided to do one. I don't think 300 justifies a stock split, but I'm not inside their head. I could be wrong. They could decide to do one. I would just ask myself, how does it benefit the company to split the shares? Because, you keep the same amount of equity, but we just increase the amount of shares. So how does it really benefit the company to split the stock as opposed to making it more attractive and increasing our base of people that can actually own the stock because they feel like it's too expensive?
I like the answer. I like it. And a lot of these will be chopped up and put onto the stock channel because there's just so many good tips. This is the Apple thing that he asked earlier. Apple's being sued by Epic about a 30% fee, basically. Apple lost, so now you can bill outside of Apple's App Store. Okay.
I need to research that a little bit more and try to understand what that impact is.
Because I say if I have something for $1, music, and they taking 30%, that is high.
Yeah, because I'm a big time long-term holding Apple. But even with this, I don't see any issues with Apple. I think Apple probably can have another 10 to 15 year run where they're not going to have any real opposition. Yeah.
I don't see where she put back in here for the holistic thing. I would say just to me, holistic would be telehealth. Holistic would be home health care. Holistic would be any stocks that's in the holistic, the alternative medicine kind of field.
Yeah, I'm a big fan of the telehealth companies. So I know one we just talked about is Teladoc. So I'm a big fan of the companies and we're seeing this a lot because I see this with my primary care provider where if you feel like your particular situation is not urgent to where you need to see the person, they allow you to do a virtual. So I think that's going to be a reality. There are companies right now currently that are direct response companies that sell directly to the consumer that offer you a prescription and you never actually see the doctor. They give you out a questionnaire and they have the ability to prescribe you based on the fact that you answered a certain amount of questions. They can prescribe you medicine that is actually from a pharmaceutical company, and you never go in to see the actual person. So I think that's something that is going to be reality, kind of based on that particular market and what the actual issue is. But I think because of the pandemic, we've seen that people need the ability to go to their doctor without necessarily having to always see the doctor.
Yeah.
So
They
I
need to be
think
able to communicate.
exactly. So I think that's going to be a reality. And then we're going to, because my primary care physician, the medical organization that they're part of, is now putting all of our information on the internet, and they're encouraging you now to like look at your information on the website. Well, before everything was kept physical, you had to go in and get a release just to get your release stuff, to get your information. Now it's all on this server, and they're encouraging you to put up your profile and to set this up. And then as long as you're inside their universe, all of your information, your account information is going to be available to you online. So I think that's going to be a new reality for a certain segment of the population that kind of wants that, especially when you're dealing with a younger generation. They're used to just doing everything, having everything being super convenient. I think that's going to be part of their experience where I can go see a doctor about an issue that's not that serious on the internet.
Yeah, I think we're gonna do on this channel. We're gonna do an Amazon breakdown and an ARC breakdown. So like we'll schedule that in the future. But ARC breakdown and Amazon breakdown, because I want you guys to understand, like, a lot of people think, well, passive income, but really what you have to understand is your goal is to make as much money as possible and then invest into vehicles that are passive. That's why people still invest in ETFs, because this guy said, well, why don't they just buy their own stock if they know it's inside the ETF? And I said, it's not the same. That's why I want to do an ARC breakdown of why people invest in that, what makes sense, how do people do it. So she just said Amazon just opened a pharmacy store.
Yeah, I believe it.
Yeah. That's crazy. So you guys, we hit the hour mark. We want to thank Diamond Dave for all his knowledge and bringing it to the channel here. We'll chop this video up and put it on the other channel.
Okay.
Because I just think it's vital, and people learn in 5-minute segments, 5 to 10-minute segments. So we're just gonna make it work with people how they learn.
Okay, that's cool.
So Diamond Dave, what is the highest paid part-time job in the world?
Okay, so the highest paid part-time job in the world is really an options training course, but it's really bigger than that. It's really a course to help you get autonomy, to help you get the freedom that you really desire. And so the goal of the course is to put you in a position to where, as an options trader, you can generate a minimum of $2,000 a month. It is relatively easy. And one of the reasons why I know it's relatively easy, and I will give you a heads up, there's a company called, I think it's CCJ. It's a uranium company. I did an options play on there, and I generated approximately around $2,000 in the course of, I wouldn't say maybe less than 5 days. And I'm not telling you that to be braggadocious, but I want you to understand the power of the markets and how in a relatively short amount of time I was able to get around $2,000 profit. So I'll show evidence of that on my YouTube channel probably later this week. Play took a little bit longer than what I thought because of the way the market was moving, but I was able to capture that profit. It was around 180% profit. And the goal is to get you in a position where you can generate money like that, where you can now understand how to go live the life that you really desire, because income is not going to be an impediment for you. There's so much money in the financial markets that we're not aware of. We don't necessarily know how to get the money out of the market. And I want to teach it from a standpoint where it's not a get rich quick. It's not that we driving around in Lambos and Testarossas and we, living in, going to 5-star hotels. And there's nothing wrong with that if that's what you want to do. But I want to really show people how you can get money out of the market, because you understand the market. You're able to use your brain, put you at a $2,000 a month minimum, and then work you up from there. And you may find that it only takes $5,000 a month for you to live the life that you want. Or you may be a woman who's married, and you may find that, for me to stay home with my kids, it may only take $3,000 a month. But I want to really show you how you can utilize the markets to generate income that is a decent amount of money to us, but to the market is really nothing. So they won't even notice that you're taking that kind of money out of the market. So that's what the highest paid part-time job in the world is.
For sure. Listen, someone said I trade stock options, all about risk management. I think it's all about behavior as well. I mean, let's just a lot of it is behavior. A lot of it is developing habits. People think they're supposed to hit home runs and get greedy and get out of pocket. And so that's, I try to tell you guys this stuff because I just know so many, I know so many people who, one, trade stocks, and two, own businesses that don't take over their whole life, and they ain't on gram stunting. They literally just live with their family and have a good time.
Yeah, definitely.
and make money. And it's very much, I always tell people go watch the Boiler Room. This was one a time when it was someone in between you and the stock market. Now
Yeah,
you have this opportunity to do it yourself, right? Karen B said she made 8,000 last week from Amazon options, baby. Fatima
good
said, how
deal.
do you sign up? I have the links in the description here. If I don't, I'm gonna put it back in there and I'm gonna pin it as the top comment under the
Yeah,
video.
definitely. Yeah, and I think one of the things about being in this market, and this is what I did with personally, is why in my VIP course I have a mindset counselor. The
Mm-hmm.
money starts to come to you so easy, you get spoiled.
Mm-hmm.
So now, and this is something that you very much talked about, instead of you taking 20%, you feel like that's not enough. I need to get 100%.
Mm-hmm.
Well, you should just take the 20% because there's no bank in the world that's going to give you 20% in, let's say, 7 days.
Yeah.
But you get so used to generating 180%, 1,000%, 500% to where now 20% seems like not enough of a return. And so it is very much about habits and understanding that take the profit that's on the table
Mm-hmm.
and leave, recapitalize, and go back in. And so I started to really train myself to kind of think like a real estate investor. Take the 15%, take the 20%.
Mm-hmm.
You can always go get into another deal. But one of the challenges of being in this particular marketplace is the money starts flowing so fast, you start passing over guaranteed money to try to get more money. And so that's one of the things that you really got to manage is your psychology, is your emotions, and also your habits.
Mm-hmm.
And get into that habit of taking the money that's on the table. You can always come back into the market as opposed to trying to figure out how to take what your gain is and try to multiply it into a 20,000% return, like what some of this people got off AMC and GME. That's not anything wrong with that, but that's not the normal day-to-day activity of the market.
Well, how much can people start with when it comes to options?
What I recommend people start with, and this is not financial advice, I recommend to start with an account around $250 or $500. The reason why I tell this is that the options market creates massive leverage.
Mm-hmm.
So you come in with a certain amount of principal, but you have the ability to create a massive amount of leverage in the market.
Mm-hmm.
And it's that leverage is what creates those exponential gains. But at the same time, it's very likely as a rookie trader or a newbie trader, you're going to blow your account.
Mm-hmm.
I would rather blow an account that you started off with $250 or $500 than you will blow an account that you started off with $10,000.
Honey, whew, that's gambling.
Until you learn how to manage your emotions with money, how to be very surgical, how to almost think like a computer, how to override your emotion, how to override your greed, how to override your fear of missing out, and to just execute trades, to be very disciplined, is very likely going to blow an account. And a lot of times you'll blow an account after a long string of success. Most traders have their biggest challenge after a long string of success, not after a lot of failure. So one of the things that we really work with you is to get you to understand the mindset part of trading, to put you in the best position to have long-term success. I want you to have longevity in this market because I know that it's a great place for us to be successful in. Mm-hmm. We just got to start getting into this space and getting used to it and understanding that what we perceive as money is not really money. There's a wholly different type of conversation about money in these markets that we're not having because we're used to rapper money and celebrity money as opposed to what real money is.
There's a young man, I'm trying to see if I can get him on, but he essentially traded and his family was like, stop playing, go get a real job. So he moved into his own apartment, fully furnished it. And they're like, what are you doing? What are you doing? He's like, I'm trading. And see that. And so I think for African-American communities, sometimes we want to see the money. We need to see it to believe it kind of thing going on. So that's kind of what's going on with it. So yeah, long-term wealth. Yeah. There's a lot I would love to say on it, but all right, you guys, we're going to go enjoy our Fridays. Thank you so much for being here, Diamond Dave. Again, where can they find you on social media?
You can find me on YouTube on the Diamond Dave. You can also find me on Instagram on the Diamond_Dave. So reach out to me if I have any questions about the course, let me know. But I want to really encourage you to click that link that's in the particular chat. Go ahead and look into it and go ahead and move forward with everything. And
also your private classic long-term game knowledge is on your Patreon, and they can get that at your channel. Yeah, definitely. It's Patreon, I think /Diamond Dave. Got you. Yes, so yeah, Tima, you can definitely reach out to Dave there and ask those questions on his channel. So again, all right, you guys, this is your girl Erica from the Classy Climb Job. That's gone blog. We're still a little sick. We're recovering over here, but I really want to bring you guys not just the noise, not just the problems, but also the solutions and the future, because the future is out there full of solutions if you are willing to take it. Sorry, you guys. This is your girl Erica. Thank you. Talk to you later.